All right, so the bull run in retail participation in the Indian mutual fund industry is showing no signs of slowing down. Data released by AMFI shows that SIPs are now at record levels. Not just that, mutual fund AUMs too are at an all-time high. So let's unpack what this means for Indian equity and mutual fund industry. We are joined by Swarup Mohanty, CEO, Mirae Global Investment India. Swarup, good evening and welcome to the show. How do you read this data? Equity inflow at a 6-month low, but SIP numbers at an all-time high once again. Now, what does this indicate? A lot of profit booking at market high?
No, Kavita, first of all, thank you for having me on your show. Yes, you you said it because, whenever the markets are the way they are right now, and there has been a very sharp upturn in the last 1 month at least, we do expect some of the investors to take some money off the table. But what is heartening to see is that while, the lump sum investment is seeing that kind of a behavior, the SIP investor is absolutely staying put in the market. We have to observe that the same investor is behaving very differently because, in my portfolio, I would have an SIP, I would have some lump sum. While I would be redeeming from the lump sum side, my SIP continues to grow. And that's just re-emphasizing the long-termness of equity in people's minds. And finally, we are seeing the right behavior of investors towards this asset class at a time when the country is poised to become, a very strong economy in the next 5-7 years or 7-10 years. People who hold equity will, benefit from this journey, and that is what is playing out.
So the number is 14,749 crore in May, as compared to 13,728 crore in April. What pockets are we looking at? Increasing interest in small cap and mid cap, 27th consecutive month where we are seeing a lot of investment coming in over here.
Kavita, the SIP figures are showing a little bit of decline this month. I wouldn't read too much in a 1-month data. It could be due to some other factors of maybe the SIP registrations or the stoppages. We have to read through that data. If this follows up in the next 2-3 months, then we can see a trend. But in first month, I won't read too much. But yes, what you're saying is correct. There's a lot of discussion on the large cap side on its capability of alpha generation. But we hence seeing a shift towards mid cap and small caps among investors, and hence the progression seems to be growing towards the lower market cap in portfolios. And now, two things on this. One observation is, the focus continues to be more towards return generation, probably than on risk mitigation, because if people stop buying large caps and start buying small caps, I just hope and pray that they are aware of the increase of risks in their portfolios. If they are, there is no issue. But if it is just pure return generation or return chasing, then one has to be a little cognizant of the increase in the risks in their portfolios that is mounting through this process.
Very well, diversification is needed in their portfolio across market caps. But then what is the trend at your AMC? What's the category that investors are looking at?
So I think the trend at our fund has been the same. We don't have a small cap fund, so we can't comment on that. But we've seen some interest in our flexi cap. We are seeing some interest in our balanced advantage, which in the industry is going the other way. The SIP book remains consistent. So yes, the large cap has got some redemption. So it's very much in line with what's happening in the industry. We are not deviating from the trend. The only place where we probably deviated is the balanced advantage. Our ETFs have got flows like the industry, and incidentally in the ETFs also we've seen some profit booking last month. So across board, people are taking off some money off the table, and the good part is they're taking it off at market peaks. I'll be a little upset if they start taking off at the lows in the market, but no harm in taking some money off when the market peak, as long as they buy when the markets go down. And that has been a change in trend in investing in Indian retail investors, at least post-COVID. They have been buying low, and if some of them are selling high, nothing wrong with it.
And the SIPs are intact. One last question. Talking about new investors, what's the trend in tier 2 and tier 3 towns? Anything specific or new that you've observed?
See, I think the trend on SIPs is only getting stronger in those places, though there also the trend is skewed towards small caps. And I just hope it's not the new investors who are coming directly to small caps. That's very difficult to sort of gauge. But the trend of the SIP registrations continue to get stronger month on month from these cities. And that's just the beginning of the penetration of mutual funds across the country. Today, if you see the number of folios being added, year on year post-COVID is completely different to what used to happen for COVID. So one can safely start concluding that the investment in financial assets is just on the threshold of uptake, and in the next 4 or 5 years, we will see more a shift towards financial assets than the erstwhile fixed assets that was the trend of Indian investors.
All right. With that, thank you so much, Swarup, for being on the show and helping our viewers with this data today. Thank you.
Thank you, Kavita. Such a pleasure always to be on your show.
Same here. Thank you.